Thank you all very much for your attendance here tonight. For those of you that I don't know, Matt Burney is my name, and I'm the Managing Director of Bulls and Bears. We're something of a mixture between a financial news media outlet and an investor relations firm. We cover about 100 odd ASX listed companies news across the West Australian newspaper, the Business News and 6PR Radio. It's now my pleasure to introduce the first of your four presenters tonight. Full disclosure, I've done some work with this company over the years and continue to do so. And if you, like me, think that lithium is going to be the new oil in maybe 10 or 20 years' time, or perhaps even sooner, then I'd urge you to have a really good listen to this guy. He's got the largest hard rock lithium resource undeveloped anywhere in the world today. So if lithium's on your radar, you need to listen to this next presenter. He is from AVZ Minerals, who are focused on developing the world-class Monono lithium project in the Democratic Republic of Congo. AVZ has a 60% interest and the option to increase to 75% of the project, and the resource tips the scales at some 400 million tonnes, going 1.65% lithium oxide. And if I can just pause for a moment to ask you all to remember back to a couple of years ago when Wesfarmers waded into the lithium market and bought 50% of the Mount Holland lithium deposit in Western Australia out towards Southern Cross. I think they paid about $775 million for 50% of that project, and the resource at the time was 189 million tonnes, going about 1.5% lithium. So by any measure, 150 mil odd market cap company with 400 million tonnes going 1.65% is worth listening to. The Managing Director of AVZ Minerals is Nigel Ferguson. Nigel is a resource geologist with some 35 years of experience who has worked in senior management positions for the last 25 years. Nigel's been a director of several companies which have had exploration, development and mining activities in Africa, including the DRC, Zambia, Tanzania, Guinea, as well as Saudi Arabia, Southeast Asia and Central America. He's been associated with multiple ASX-listed companies over his 25 years of corporate experience, and I'm very pleased to say he's here tonight to talk to you about his Monono lithium project. Nigel.
I think just what Matt said, and I'll go and have a beer. I think that's all we need to do tonight. So, look, it's a pleasure to be here, and we've got a quick presentation, 8 minutes. So we'll jump into this as quickly as possible, as soon as the screen comes up. So as Matt said, we've got a 400 million tonne deposit sitting over in the DRC in the Congo. I've been operating over there for 12, 14 years. This deposit's just something that takes your breath away. It's only the tip of the iceberg. We're just starting to look at some of the extensions to this, so it will grow in size, but it's a complete beast of a project. Back in May of last year, we put out a DFS study, and the numbers for this project are outstanding, as you would expect. It's $2.35 billion of MPV, 10%. And about $1 billion after tax, an internal rate of return of about 53%, 33% after tax. 20-year mine life is all we've modelled so far. And look, I'm going to skip through a lot of these bits and pieces. There's a lot more information for you to go through on the little dongle that you've been given. But we have completed the DFS. We're right into getting the permitting organised. Of the eight environmental permits we require, we've got 7 already. We've got a little bit of work that needs to be done on the hydrology side of things, and then we'll be getting that 8th one that'll allow us to go for the mining licence application, get that awarded, and then we're in discussions with a group of Pan-African DFIs, such as African Finance Corp, Afrexim Bank, CIC, PIC, Development Bank of South Africa. We're all very keen on this project, and they want to see it developed as part of the development of Africa. So as soon as we get them on board, hopefully by the middle of this year, we'll be looking to complete financing and go forward with the final investment decision around about mid-year. Construction of the plant will take anywhere between 18 to 24 months. I think the engineers are saying 24 months, but I'm saying 18. First hydroelectric power to the system, and that's something we'll touch on, that is our green footprint. Comes online about Q4 of 22, and then obviously after that we'll have the first SC6 on a truck and train, Q1 23, and then 6 months after that we hope to have our primary lithium sulphate, as we call it. Excuse me, as we're calling it. Export routes, we've sourced this, finalised this. We're very comfortable with the two routes we've chosen. And essentially from Monono, we come 340 kilometres south to Kabondo Dayanda, and then we jump on the railway systems with Tazara Railways through to Dar es Salaam, and SNCC and Angolan Railways through to Lobito, Port of Lobito. There's a couple of sections of the track that need to be fixed up, but they're nothing insurmountable. Okay, so where we're at the moment is, in our minds, luck, but perfect timing if everybody asks me. Lithium market is looking like it's going into a supply deficit around about 23, 24, which is when we're looking to be coming online. And we're looking to produce around about 700,000 tonnes of SC6, and we pinch about 150,000 tonnes of that to produce our primary lithium sulphate. It's an upgraded product that runs around about 80% lithium at the moment, so people are starting to take notice on that. Also with this is some research that's been done by some of the bigger outfits out there, showing that a lot of those main battery elements that are required are going to be upscaled over the next few years. From 2018, for example, lithium is going to need to upscale by about 450% in production, so it's the right time for us to be getting finance and going into production for a couple of years down the track. One of the areas we've done a lot of work on recently is what we call the wedge. It was an area of material that we couldn't drill previously because of a flooded pit. We've drilled 1,650 metres. It's only 11 million tonnes that we've got in there, but the trick is that that's inferred resources. We want to bring that up into indicated resources, and therefore it comes into our reserves. It's previously been treated as waste, so we've had a cost for getting that out. Now it goes into this reserve category. It'll be straight into our cash flow, so we will have a lot of benefit from this, including increased indicated resources, 7% increase in our DSF, a 25% reduction in our strip ratio. It goes from 0.4 to 1, which is extremely low at the moment anyway, to 0.3 to 1. Ore reserves are going up, increased mine life, about another 9 years on mine life, and in general everything is just getting better for this. So the catalysts we have coming up, the news flow that you're probably going to be interested in, is we have 55% of our SC6 product taken out already. We've got tin offtakes on the go at the moment. We're waiting for a couple more to come in so that we can choose which two best ones we want to go forward with. The MOU on a funding syndicated DFI group will be coming up as well. PLS offtake, we are in negotiations on that. The hydroelectric scheme, we hope to have that signed up, and that'll probably jump up a little bit. We might get that sooner rather than later. The mining licence, obviously, an optimised DFS, and then we've got our DFIs chomping at the bit to have a good talk to us. They're in the database at the moment, but they just want to have those CPs sorted out. Final investment decision, construction in August 21, and then production obviously after that, 2 years down the track. There's other opportunities here as well. This is a list of them. The biggest ones we've got are the tax incentives on the SEZ, and what we're looking at is a European lithium hydroxide plant as well. We're in discussions on that. Carbon footprints, I suppose it's all about the sustainability nowadays. We had a report put out that showed that our operations are by far and away the lowest carbon footprint in all hard rock producers for stage 1 and 2 of the 4 stages USS. Including the stage 3 and 4, we knock out about 30 to 40% better than all of the West Australian producers, and even some of the brines as well. How does that all work for us, the greenhouse gas side of things? It's basically because of this hydroelectric power scheme that's up the road. It was there historically for the tin mining. It's going to be refurbished. It's in our CapEx budget, and that will provide us with approximately 28 megawatts of power at the site, only by doing half of the system, and then the second side of the system will be done from cash flow down the track. We're also going to be using, just jump to this in a minute, we're also going to be using electric vehicles on site, light four-wheel drives, and electric mining equipment as well. Sustainable goals, obviously we're very much engaged with our stakeholders in country. We've already contributed to them a lot, but that'll be a part of our focus moving forward as well. So takeaway facts from us very quickly. World-class project, 400 million tonnes of resources, 93 million tonnes of reserves. They are all going to increase. Project economics are outstanding and will hopefully only get better. Offtake agreements, a couple of them in place already. We've got more coming. Project funding, very, very much engaged with the DFIs and looking forward to go forward. But I suppose from this point, we're heavily leveraged against the EV thematic. So as long as that continues to burst, we'll be going for it. All right, the last one is in your bag, I suppose, you've got a little dongle dangle like this. It's one of our thumb drives. You should have a bit of information on there, some old press releases just recently, the presentation, and then there's a lot more information on our website. There's also a team hiding up in the back corner there if you'd like to grab hold of them and have a chat. Technical directors, business consultants, commercial directors, etc., etc. So company secretaries around somewhere as well. So thank you very much for your attention. Hope you enjoy the evening.
Good stuff. Thanks very much, Nigel, and some fabulous numbers involved in that resource. You don't see them here in Western Australia, and many people consider that Western Australia is the home of the lithium industry. So, folks, moving right along, if I could just have your attention again, please. Let's not let slip just yet. We've got three more very interesting speakers. If I just continue to have your attention, that'd be terrific. So, in keeping with the green power theme, our next presenter is Nathan Wise, the CEO of the Empower Group. The Empower Group is a technology-led company with a long history specialising in the delivery of reliable on-grid and off-grid power solutions for blue-chip corporate and government customers. As a provider of distributed power systems and solutions, Empower has been progressively increasing its footprint in this high-growth sector. Nathan Wise, the CEO, has been involved in the renewable energy business at a board and management level for some 15 years. He has been the Chief Executive Officer of Empower since 2018, during which time Empower has emerged as a leading specialist in renewable energy, battery storage and microgrid businesses. He is also a corporate and commercial lawyer. Ladies and gentlemen, can I introduce to you the CEO of the Empower Group, Nathan Wise. Thank you.
Good evening, and firstly thanks to Jason and Nick and the team at JB Equity for inviting us here tonight and for their support. We really appreciate it. Just waiting for this to click along. There is a disclaimer which I'm sure you've all read. There's a quiz on it at the end. The Empower business is a renewable energy, battery storage and microgrid business, and we've delivered projects across Australia, New Zealand and some parts of the Pacific Islands. We're based in Sydney with a team of about 30 people, and we've been delivering projects for quite a number of years across those different technologies. I might just ask if something wrong with the remote, so if we could move along to the next slide. Our strategy is to deliver superior returns from renewable energy projects. And the key things that we do is the design and construct of projects. We operate and maintain them, and we actively manage them to increase revenues and to improve returns. Our business has a very deep technical capability with a team of engineers that spans electrical engineering, control systems engineers, and we very much focus on the smarts that sit across these projects, particularly where we span multiple technologies. The projects we've delivered have been largely for blue chip customers across oil and gas, the resource sector. We've got a very well-known brand, particularly around mission critical power systems where reliability is key. So we're seen as a very safe pair of hands in that space. We also have an asset management division that looks after several hundred power systems and provides us with a regular annuity revenue on a year-to-year basis. The tailwinds in the sector are very strong at the moment, and particularly the state-based systems setting up renewable energy zones and the like. But the thing that really plays to our strengths is the increased interest on system reliability, particularly where energy storage is concerned, and the role of energy storage in ensuring reliability of the grid as renewables increase in penetration. Our focus going forward is on 5 megawatt solar farms, and the images on the screen show you what a good looking 5 megawatt solar farm looks like. 5 megawatt solar farms have approximately 17,000 solar panels. They take up roughly 10 hectares of land. They might power something like 1,500 homes and cost in the order of 8 to 10 million capital value to fully develop them and get them to revenue generating stage. The reason we like 5 megawatt solar farms is not just because we've delivered 5 of them for our clients, but it's because there's a lot of benefit that 5 megawatts provide. 5 megawatts is the threshold below which the market operator automatically exempts solar farms, which means that they are both relatively easy to connect and also cannot have their output curtailed. And you may have seen some of the news stories in the last year or two of large-scale solar farms that have had both connection issues and having their output cut by up to 50% with no notice by the market operator. So we see this as a really interesting space, and we're looking to put together a portfolio of 20 solar farms across New South Wales, Victoria and South Australia. In the first instance, it'll be solar PV. Later on, we're looking to augment that with energy storage. And the reason for that is to be able to start time shifting the power and to be able to take advantages of peaks in the wholesale prices when demand surges. So that's our focus. We're focused on working with developers who are going through the permitting stage of these projects, picking up the projects once they are fully permitted, taking them through financial close by attracting the funding, and then going through the design and construct phase, leading into the 30-year operate and maintain phase. So we're looking to mitigate the development risk through this model and also deploy this 20 project portfolio as quickly as possible, because we cut out effectively the development stage. In doing this, we create two different revenue streams. One is an upfront revenue stream through originating the deals and through the design and construct, and they can be anywhere in the region of 8 to 10 million per project. And then on an ongoing basis, we get paid to look after the assets, and that's a very sticky revenue stream that will last for the life of the projects, which is upwards of 30 years. And of course, down the track, if and when we add energy storage, there's a further income stream for us that comes on board. The way we're looking to fund this rollout is through using a special purpose fund off balance sheet, where Empower will retain a carried interest, and we're going through a funding process in parallel with optioning up new sites to find capital partners for the ongoing ownership of these assets. It's very important to us as we go through this that we separate out the Empower operating business from the sort of underlying assets that and projects that we're creating, because they're quite different investment propositions. In terms of where we've got to recently, we've been quite focused on building our pipeline of potential projects. We've got options over 6 sites at the moment across Victoria and South Australia, and we're looking to increase that in the near term. And the goal, as I mentioned, is 20 sites with a capital value of more than 150 million and a capacity of 100 megawatts. Our half-year results were released recently, and our business has recorded some solid revenues and a positive EBITDA, and we're very well placed as we bring this build, own, operate strategy on to accelerate that growth. We also recently completed a $5 million capital raise with the assistance from JP Equity, so we've got the funding that we need to execute the strategy that we have in front of us. So to finish, we see this as a very compelling opportunity. There's an unstoppable shift towards decentralised power generation. We've got a very focused business model and a very clear strategy. We've got a team with experience in delivering projects of this nature, and there's extremely high interest and high growth in the market that we're focused on, and we're all working towards, I guess, a sustainable future. Thank you very much.
Thanks very much, Nathan. It seems that wind and solar is on everybody's lips at the moment, including the big corporates. So the other thing I should say is that I just had a flashback. I think I said to you that AVZ's market cap was about 150 million. In fact, it's 650 million. So, Nigel, apologies for that. It was 150 million when I started working with them, so I've got that number emblazoned in my head. Anyway, apologies, Nigel. So our next presenter, ladies and gentlemen, is David Francis from Province Resources. Province is investigating the world-class wind and solar resources of the Gascoyne region with a view to creating WA's very first listed green hydrogen project. And at a time when the state government has just appointed a Minister for Hydrogen, a most unusual move, but nonetheless one that I think underlines the investment opportunity relating to hydrogen. And of course there are other big players like Fortescue and Twiggy Forrest and others who are also out there in the marketplace looking to create hydrogen opportunities. And so, folks, if I can just give you a quick bio on David. He's Perth-based. He's an international mining executive with some 30 years' experience with a track record of transacting, discovering and developing assets in Australia and Africa. He led Mawson West from 2006 to 2012, which included acquiring and recommissioning a copper-silver mine in the Democratic Republic of Congo and relisting on the Toronto Stock Exchange with a market cap of some 250 million. Completing the world's largest base metals capital raise and IPO in 2010. Ladies and gentlemen, David Francis from Province Resources.
Thanks, Matt. Thanks, JP Equity. Well, welcome, guys, to the speed dating event, company speed dating event for March. I hope to tell you a little bit about what we're up to at Province Resources. We, as Matt has indicated, are the first listed entity to venture into green hydrogen project in Western Australia. It's quite a simple story, which I hope to tell you tonight. So basically it's all about navigating the global economy towards a decarbonisation and to be neutral, carbon neutral by 2050, the Paris Agreement that everybody signed up to and is madly trying to adhere to. So what is green hydrogen? There are several forms of hydrogen being currently produced today. In fact, most of them are produced from fossil fuels. So green is the only one that is carbon zero. Grey hydrogen is produced from methane, CH4, carbon and hydrogen. So when you split carbon and hydrogen, you get hydrogen and you get CO2. So grey hydrogen produces hydrogen and CO2. They don't bother to capture the CO2, they let it go to the atmosphere. And for every tonne of hydrogen they make, they produce 9 tonnes of CO2. So that's not a great thing. Blue hydrogen, there's lots of blue hydrogen companies around. The greenwashing of the fossil fuel industry currently is where they still use CH4, methane gas, to produce hydrogen, but they capture the carbon, capture the CO2. So they're producing hydrogen but capturing the CO2, And the idea is to sequestrate it or store it in old oil wells, etc. Hasn't been proven to be successful yet. So we thought that green hydrogen was a better way to go. And the zero carbon hydrogen story is basically making hydrogen with a zero carbon footprint, which everybody's talking about tonight. So basically, to produce green hydrogen, you use renewable energy, so sun and wind is what we've got on the slide there. You could also use wave energy or hydro energy, as long as it doesn't produce carbon, to generate electricity. You use water, not CH4, so no carbon involved, hydrogen and oxygen, H2O, put simple water, put it into an electrolyser, which I can go and buy from Alltronics down the road, so no new technologies here. Sun and wind's been around for a long time, so are solar and electricity, solar panels and turbines. Electrolysis, electrolyser, put the water into the electrolyser, put in a lot of current, split the water to its component parts, hydrogen gas and oxygen gas. Capture the hydrogen gas. You can also capture oxygen gas if you have a market, or you can let it go to the atmosphere, basically a big tree. So the carbon generated is zero. The hydrogen is then used either in mobility, hydrogen fuel cell cars, heavy transport, heavy industry, for a fuel stock for heavy industry, or as a gas feed into the local grid. State government, as Matt's pointed out, is a new hydrogen minister, which is Alana McTiernan. She has that portfolio. The state government has said that they want 10% hydrogen in the Dampier to Bunbury gas pipeline by 2030. If that's the case, then that's a massive market. That's 80 terajoules a day, which is a lot of energy. So I won't dwell too much on the macro. It's been talked about already. We know it's coming. The massive tailwind about decarbonising the global economy. Everybody is racing to meet the Paris Agreement. Also, now that Trump's gone, we've got some good comments coming out of the US that they will also come back to the table on the Paris Agreement. So we're looking at a decarbonised world. The EU is leading this. Australia is now catching up rapidly, thankfully, having spent a few years in Europe previous to this green hydrogen play. The tailwind in Europe has been there for some time. They are very much pushing towards a carbon zero or carbon neutral economy by 2050. One thing that I will point out in the last paragraph on that slide is that climate experts say that green hydrogen is indispensable to reaching carbon neutrality. Now, indispensable is a fairly innocuous word, but what it actually means is it's impossible to reach carbon neutrality by 2050 without green hydrogen. And all of the 8 scenarios the EU are putting forward for their future greening of industry, etc., to meet the Paris Accord agreements require green hydrogen as a major component for decarbonising industry. So on one hand, with Nigel, etc., which is the guys that are putting towards batteries for EVs, which we all know about, and unless everybody's been hiding under a rock or in a cave, there's no way known that we wouldn't have heard about all the hydrogen tailwind that's happening in Australia now. Policy changes, funds being available for research, etc. So with everybody now realising and acknowledging, the key is acknowledging, that we cannot reach the Paris Accord without green hydrogen as a major component of decarbonising the industry, we won't get there. So that 2-degree increase between the last industrial revolution to 2050 is impossible to meet. 2-degree increase is impossible to meet without green hydrogen. So that's why we're all very excited and everybody's racing around trying to get into this green hydrogen space. And you would have heard the news. It's the buzzword of the moment, so much so that, as Matt pointed out rightly, that unprecedented. The government has appointed put forward a hydrogen industry portfolio, which is run now by Alana McTiernan. So the opportunity, it doesn't really matter whose graphs you look at. All of the green industries, the Energy Council, the green energy industry, everybody's graphs are asymptotic and looking for massive increases, exponential increase in hydrogen use in the market going forward. So that's the opportunity that we're tapping into. So essentially, ours is a very simple story. It's a part of the world which I'll get to very shortly, which we believe will tick the 7 major boxes that you need for a green hydrogen project. And we aim to be the first Western Australian producer and exporter of 100% green hydrogen in the market. So the project area that we have chosen, we could have chosen anywhere in the world. A lot of research went into where was the best place to do it. Obviously, COVID had a lot to do with it. Norway, EAU and Australia are the 3 main places where renewables are the biggest play. Australia, obviously, lots of sun, lots of wind. So the area that was chosen was just south of Carnarvon. And the reason for that is it's a bit of a sweet spot. It's far enough north not to get into affected by the southern cold fronts, cloudy days, etc. It has a massive amount of sun irradiance, and the wind blows all the time, basically. I've got some pictures which I can show people later about trees laying on their side. So the 7 points you need: sun and wind and water, the 3 main components of green hydrogen. The sun shines 211 days a year in Carnarvon. It's not affected by the southern cold fronts or the northern thunderstorm activity or cyclone area. It's water, so the ocean, irreplaceable. Totally renewable resource. So 3 things. So unlike a mine or an oil play, it doesn't run out. So the sun never stops shining, the wind never stops blowing, and the ocean's never going to dry up anytime soon. So the 3 major inputs for the green hydrogen project, it never runs out. So the project is a very, very long-term project. In fact, forever, basically. Infrastructure is one of the main components as well. The black horizontal line is a dampier to Bunbury natural gas pipeline. As I said, the government wants 10% hydrogen gas in that by 2030. Very nice domestic market for us. The red line is the Norwest Arterial Highway. If you're going to build a project, it's not in the middle of Africa. When you need to bring things in to build something, it's only a couple of kilometres from the main arterial route, so it's very easy to build. Land use is also, the picture there is from the project area, so low competing land use is what you need. It's not much good trying to compete with high productivity agricultural investment or cities, etc. So the fourth windiest place is Carnarvon. Rottnest is the windiest, Augusta is the second windiest, and Dunsra is basically the 3rd windiest. So we're never going to have one of those projects in those places. So this is the 4th windiest place in Western Australia. Market, obviously the domestic market is the Dampier to Bunbury natural gas pipeline. Also an industrial market. We're very close to Asia, which is going to be one of the largest users of hydrogen. Hydrogen is notoriously hard to transport. Green ammonia is most likely the product that we will make. Easy to transport either in a bucket or a wheelbarrow. It's a solid or a liquid at room temperature. And obviously the regulatory environment is very conducive. The massive tailwinds that everybody's been talking about make it easy for us to get this project approved. And this is not working. But basically, the next 6 months we aim to engage a very large independent power provider to build the solar side of the business, and then we will develop the hydrogen side. So it's basically it's a very simple story: sun, wind, and water, totally renewable and inexhaustible supplies of that. Where we've got the project. A good market, local domestic market, 10% hydrogen gas into the gas pipeline, plus the Asian markets, and infrastructure's already there, and that's basically it. So thanks guys, thanks for coming.
Thanks, Dave. You very nearly got crash tackled by Kat then. Turns out Kat was all talk, she didn't show. I'll tell you what, some of the gold miners in the room might like to have one of those never-ending resources like yours, Dave, hydrogen. Folks, we're on to our last speaker for the night, and that is Jeremy Robinson, the Managing Director of RareX. RareX Limited is an ASX-listed specialist company focused on developing rare earth deposits in Australia, including the Cummins Range Rare Earths project in the East Kimberley region. The Cummins Range deposit has an inferred resource of 13 million tonnes being 1.13% total rare earth oxides. The known resource occupies a small portion of the Cummins Range intrusive complex that is approximately 2 kilometres by 2 kilometres. If I can just tell you a little bit about Jeremy Robinson, he is in fact the founder of RareX. He's worked in both the capital markets and in-house for junior and mid-cap mining companies for the past 15 years. Jeremy holds a Bachelor of Commerce from the University of Western Australia, just over there, majoring in corporate finance, investment finance and marketing. Ladies and gentlemen, Jeremy Robinson from RareX.
Thanks very much for that kind introduction, and I'm pleased to present the RareX story to you today. RareX is a company that we put together 2-3 years ago. We saw what was about to happen in the rare earth space, and we acted quickly and secured an asset privately and have bought it publicly over the last 2 to 3 years to some great success. It was probably more of a traditional story at this point in terms of we're into drilling holes and trying to mine the stuff. But needless to say, rare earths are essential to the new world economy. None of the stories you've heard previously would be possible without rare earths. So I won't dwell too long on the corporate structure of the company, but just quickly, we're a rare earths company, as I mentioned. We've had a lot of success out there drilling last year. We'll be back out there drilling next month. We've had some quite spectacular drill results over the past 6 to 12 months. Those sort of widths and grades in rare earth wouldn't be out of place in any of the world-class mines around the place. We've attracted a very good partner in Shanghai Resources. They're the best in class in rare earths, in my opinion, and probably most other people's opinions. And rare earths have really hit the headlines over the last 12 months, both geopolitically, but finally we're seeing price reaction, which is really, really positive for us wannabe producers to see. But I won't dwell on this too much. Look, we're a small market cap company still relative to our peers. I should probably mention my chairman, John Young, who's in the room somewhere. Very good leader of ours and has a lot of success in the industrial minerals space, specifically Pilbara Minerals. And I'm very, very well supported by my board and management there. I should probably mention we have a good cash balance and we have a couple of investments which are coming to market very shortly as well. Coming to the ASX, they're currently listed on the Canadian Stock Exchange. So rare earths, I apologise if you know all about rare earths, but this is an education process for all of us. We're very confident of the story in rare earths. The demand is really coming. It's an EV story. It's a story about wind power. It's a story about renewable energy. All these things that you've heard about over the last 3 talks is directly applicable to us as well. And what makes rare earths quite essential to this new world economy is their magnetic properties. They are truly, there is nothing quite like them in terms of magnets. You need them in rare earth permanent magnets. In a Tesla, there's a large motor at every wheel that drives the car along, and they're all full of rare earths. This is true of wind turbines as well. It's true of all your everyday electronics. It's probably some in your iPhone right now. But historically, all these rare earths have probably come from China at this point in time. It's changing slowly, and we hope to be part of that story, at least in part. Eventually, your rare earths will travel through China at some point, whether they're getting refined there or turned into magnets. But we are changing the product chain slowly over time. So this is leading to quite a significant deficit in the rare earth market. You're seeing deficits over the rest of this decade. This is Adamas Intelligence information. And this is what we saw 2-3 years ago when we came to this space, and it's just becoming more and more apparent every day. And finally, we've seen rare earth prices react. NdPr, which is the ones we're focused on, neodymium and praseodymium, it's quite hard to say, but they're very important to all of us. Their prices have moved up quite sharply over the last 3 to 6 months, and that's probably why the rare earth companies are having their day in the sun. Moved from $40 a kilo up to about $80, $90 a kilo, which is well above our incentive price of about $70 a kilo. So quickly into the project. This is where we are just in our own backyard here. The Kimberley, it's been a great place to operate, especially during COVID. There's nothing you can't get done up there. We have good relations with all our stakeholders. We take our ESG principles very seriously. We're in the process of developing some ESG frameworks to work through with the lovely folks at PwC. So there's nothing we can't get done in this part of the world, and we will build a mine there in the next 2 to 3 years. So there's the drilling we did last year, some quite spectacular results, 109 metres at 3.6% TREO. They're drill holes that would sit comfortably in Mount Weld itself, which is what our style of deposit is. It's a weathered carbonatite, has good NdPr content, which is the main value driver of these projects at 22%. And what we're about to do, as soon as it stops raining, it's been a mighty wet up there this year, we'll be drilling into the primary part of this deposit. So far drilling has been focused on the top 100 to 150 metres of our deposit, and now we'll be drilling in the 150 to 300, possibly 400 metre window, which really could grow the size of this resource. Cummins Range may not be 13 million tonnes for very much longer. We're trying to push it to 20, 30, 40 million tonnes, which is where we want to be. So what are we going to do this year? Look, drilling is the short answer. That's what drives share prices. We'll also produce a scoping study and a BFS on the back of some metallurgy, which we're doing. Probably glossed over it early, but we have the world's best rare earth flotation expert on our side, and Gavin Beer. He's worked on every project in the world. He will make this project work for us, and we have a lot of faith in Gavin. So just in terms of commercialisation, how are we going to make money out of this? Because that's what it's all about. When I started in the rare earths business 2-3 years ago, all roads led to Southeast Asia and China, and in some respects they still do. But at the will of our government, there are a number of companies looking to produce refineries, build refineries within Australia. Lynas is famously coming home from its adventures in Malaysia. It's building a cracking and leaching plant just out of Kalgoorlie. Iluka are making great noises about Eneabba as a potential cracking and leaching circuit there. We've also got Hastings talking about Port Hedland, Narrafura at Nolans. Just quickly, all these places are potential homes for our product. I'm not saying we've done anything with them, but they are potential homes for our product. No longer are we driven to sell our product only to Asia. That all being said, we have partnered up with a Chinese company in the short term. This is all about a trading business which we're trying to establish. We haven't sold any of the project or any of the company to China Inc. yet, but we are working with to set up a trading company in Singapore to try and build a concentrate trading business handling rare earths. So, it's a bit obscure at the moment, but we think this business has a lot of room to grow. Shanghai are best in class. They're very Western looking. They're responsible for MP Materials, which is a $7 billion rare earth behemoth on the New York Stock Exchange, arguably overvalued, but they're the times we live in. We've also got a big involvement in Greenland Minerals, and now they're choosing to work with us. And that was quickly the rare earth story. I'd be remiss of me not to talk about our exploration efforts in New South Wales. We have a very good joint venture with Kincora Copper there in the Lachlan Fold Belt, looking for North Parkes and Cadia deposits. They're about to list on the ASX, $8 to $10 million they've raised. They're very well funded, very well managed. John Holliday's there, he found Cadia, so he knows what he's doing. We don't get a lot of value for our 35% free carry, but if they find something, we definitely will. And copper very much fits into the sustainability story. It fits into the EV story. I mean, most metals do, to be honest. You can't build a sustainable future without metals, all of them. It's a great space to be in. Look, finally, we're a rare earth company. That's where we focus our attention. We've got a good asset in a safe jurisdiction. We delivered results with the drill bit last year. We'll do it again this year. We've got a great partner in Shanghai. Rare earth prices are on the march, so it's a good time to be in the business. And you get the free kick of some exciting exploration that's going on in New South Wales at the moment. So at a market cap of $50-60 million, we think there's a lot of room to grow in our story. A lot of our peers are trading the $300-400 million market cap at the moment. So hopefully we can close the gap this year. And thanks for listening to that.